My next guest likes Macy's, Dick's, Target, and Lululemon. But with such big moves, should investors chase these gains? Joining me now is John Kernan, senior retail analyst at Cowen. Welcome back, John.
Hi, Kelly. Happy Friday. Thanks for having me.
Thanks for being here. Let's just speak to that concern. I mean, I guess we saw Target with a pullback this week, but, I mean, look at Macy's. Wow.
Yeah, sure. I don't cover Target and Macy's. My colleague, Oliver Chen, does. But what you're seeing is incredible strength in the consumer. Right now, you're looking at weekly retail sales data that we look at that's multiple standard deviations above any long-term trend. The consumer is out and they're spending very aggressively this early this holiday season. So it's going to make for a strong holiday season. I think the worry is this as good as it gets given how flush consumers are right now?
Right. And I'm sure the answer to some extent is it depends. Now, I know you cover Dick's and Lulu. I believe you have a buy rating on pretty much everything in your coverage space right now, except for a couple names like Skechers and Puma. Is that right?
We don't have a buy rating on just everything, but yes, we do like a lot. Lulu, Nike, Under Armour, Dick's, all those stocks are at multi-year highs. There's been a huge inflection in the financial models. There's a lot of themes underpinning the strength in their top line and their margin structures. I think those continue into next year, even when you lap a very robust top line environment.
You guys are looking for holiday sales. Is this right? Up 11 to 13%?
We are. It's the best holiday top line growth here at Cowen. We forecast 11 to 13% to roughly $884 billion for the holiday. It's the best holiday top line growth we've seen since 2005. So it's one for the ages. There's been $1.8 trillion of stimulus essentially directly deposited into consumers' bank accounts since March of 2020. That's almost 10% of our whole GDP. That's had incredible effects on consumer demand, the supply chain, and inflation. But things are good right now for the consumer.
How much more room would names like Lulu and Dick's have to run, do you think?
I think when you look at their financial models, they can double earnings over the next 5 years. So I think there's still upside. Certainly some of it's been pulled forward with the moves in the stock prices, but I think next year you're looking at another 20% plus gains in those stocks. I think the combination of earnings growth and even some more valuation expansion can take these stocks a lot higher.
Let's talk Foot Locker. Is that the one we just were speaking about? You know, bad reaction to the quarter. Can't quite make sense of it. Maybe it's talk about supply chain issues sticking around. What are your thoughts on it?
Yeah, that's certainly topical today. The stock is down double digits. I think there's confusion over their guidance for the fourth quarter. And a lot of people's financial models aren't in sync with maybe what the company's saying. But stock, if you exclude the company's stake in GOAT, which is one of the fastest growing businesses in consumer, it's a privately held company that Foot Locker holds a stake in. The stock trades at less than 4 times EBITDA. So it's a very cheap stock. So a lot of moving pieces in the financial model right now.
What do you think is happening with this mixed messaging? I'm just curious if other names could be vulnerable to it as well.
Yeah, it's on supply chain. It's on concerns of, Nike. Foot Locker's heavily levered to Nike. It's over 75% of sales. Nike obviously had some supply chain issues when Vietnam shut down. And I think there's concerns as to whether Foot Locker can comp positively in the fourth quarter in what is a very robust environment. I think investors want to see growth, top line growth, and they're not quite sure what management's guidance points to at this point.
Very interesting, but you think sort of an exception to the rule here for what looks like a very strong season.
Shepard Smith here. Thanks for watching CNBC on YouTube.